Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today, and the first one I'd like to look at is the euro against the dollar. Now, if we look at this, we can see a fourth bullish white soldier and bullish opening white Mariposa yesterday. Another good bullish soldier that this time moved up and closed over the important old June 2018 high at 118.51. There seems to be little beyond that once it has stabilized until the summer highs in the 119 to 119.20 area and some light congestion around 119.35. The next significant resistance will be the current combination of the 2008 to date and the 2011 to date downtrends. They're currently at 119.67. So far today, hesitation. The market is hesitating around this 118.51 high from June 2018. Not surprising really, given some consolidation and stabilization is needed. Below, we still have the short stroke medium moving average support currently at 117.95. The next chart to look at is cable, aka sterling against the US dollar. Now here we have a bullish engulfing pattern and bullish opening long white Mariposa yesterday that punched up and closed well through the capping short stroke medium moving average, currently 130.17, and then tackled and overcame the August base congestion zone, 130.5 to 131. Prices slowed down and halted upon approach to the next big resistance, the key 50% Fibonacci for the whole of the 2016 move at 132.33. This is a big resistance, and tackling it requires some consideration and pondering from the market. All this action further discredits the second larger bearish bump and run reversal trend line, currently at 129.68, as unless the market turns swiftly back down, it can no longer be seen as an attractor to this market. So far today, a not wholly unexpected pullback, a small one so far. That's still well above the short stroke medium moving average below. Next chart to look at is euro against sterling. A bearish long black Mariposa yesterday, an interesting one as it was the vehement rejection of any approach, once again, up towards the lesser recent Fibonacci level at 91.83, and a confirmation and consolidation of the same high seen in the last 3 weeks in the 91.50 area. The drop went down through and closed below the key March to April 50% Fibonacci line at 90.85, and all the moving averages, bar the long moving average, which is currently at 88.90. The market slowed down and halted, much like last week's key reversal down, on approach to the other lesser Fibonacci line of the same move, this time below at 89.87. We now have overhead the next resistance at the medium moving average, currently at 90.44. Overall, one may see yesterday's action as a possible pipe top, with the distinct possibility of any further decline this week making a weekly key reversal, but only if we start by dropping below 90 even this week. So far today, a not unexpected pullback up to testing the medium moving average so far. We await further developments. The next chart to look at is the US dollar against the Indian rupee. A second bullish white soldier and follow on from the previous session's interesting bullish engulfing pattern. The market punched up through the Fibonacci congestion area that has secreted within at the 50% Fibonacci line of the September 2019 to April 2020 move at 73.67, but failed to close over it. The move up was halted, unsurprisingly, by the short stroke medium moving average, currently at 73.73. Please note this moving average currently works in partnership with the June to date downtrend, currently at 73.86. Also, the list continues to work within the narrowing space between the rising 2020 uptrend, currently at 73.21, and the flat 50% Fibonacci line for 2020 at 73.84. So far today, a further attempt higher, which seems aborted. Prices punched up over the Fibonacci congestion and the short medium moving average, but failed to touch the 50% Fibonacci line and have since dropped back down to unchanged. The final chart I'd like to look at is the US dollar against the Brazilian real. A second consecutive indecisive doji cross yesterday, an unusual occurrence to be sure, closing once again right on the short moving average, currently at 560.32. Top side, we still have the 565 to 570 area that has capped the market 2 weeks ago and again back in mid-August. Interesting, the last few days have seen a renewal of the support on a closing basis of the short moving average. Further resistance overhead is still being provided by the middle tight, currently at 585.76, of the late July to mid-September bullish Andrews pitchfork. Support below is layered between 552.91 down to currently 548.86. And that about wraps it up. So in the meantime, stay safe in the markets and in real life.